All right, so you want the inside scoop on Morningstar, right? Buckle up, because we are diving deep into their annual reports.
We're talking 2020, 2021, 2022, and 2023.
Yeah, we're going beyond the headlines here. Like, what's the real story?
These reports, they're like a company's diary. You see their journey, the ups, the downs.
All about choices, right? Like how they react to stuff.
Exactly. And this one quote, it just jumped out at me. Our independence and our history of innovation make us a trusted resource for investors.
Okay, so independence is a big deal for them.
Huge, especially in finance, right? You got to trust where your info's coming from.
No conflicts of interest.
Precisely. Morningstar, they provide research, ratings, analysis, the whole shebang. So yeah, being independent, that's their bread and butter.
Makes total sense. Now, speaking of trust, how have they been handling these, like, market roller coasters lately?
Because 2021 was wild.
Private equity was booming. Then
Yeah.
2022 came along and
Yeah.
reality check.
Yeah, exactly. So how did Morningstar handle that?
Well, that's where the revenue model comes in. It's diverse.
Diverse how?
They've got their hands in multiple cookie jars.
Yeah.
There's subscriptions for their research, fees from their investment management side, even revenue from credit ratings.
Smart. So if one area dips,
The others act like a buffer.
okay, so it's like a safety net, but like a really well-designed one. But not all those revenue streams are created equal though, right?
Exactly, and that's where things get interesting for investors.
Well, the 2022 report, it showed their license-based revenue, so subscriptions. Those stayed pretty solid. But the asset-based revenue, that's tied to market performance.
And the market kind of tanked.
Right. So that revenue, it took a hit.
That's the kind of detail that makes you realize.
Due diligence is never over.
Exactly. Got to stay informed. Now, while we're talking about changing landscapes, one thing that caught my eye was Morningstar's focus, like sustainability and ESG.
Oh, yeah, the ESG thing. Big time.
It seemed like every other page was mentioning it.
It's not just a trend for them. They're really leaning into it. For example, they're a UNPR signatory,
UNPRI.
the UN Principles for Responsible Investment. It's a big deal. Basically, they're part of a group of investors who are all about integrating those ESG factors into their decisions.
So it's like putting your money where your mouth is.
Exactly. And it's not just external stuff either. Internally, they've been doing pay equity assessments. They're walking the walk.
Okay, so for someone like me, an average investor, why should I care about all this UNPRI ESG stuff?
It's about values, right? Does this company, do their actions line up with what you believe in? And beyond that, it impacts their offerings. Like, they're adding ESG metrics into their research, creating tools specifically for sustainable investing.
So if I care about where my money's going and what it's doing,
Morningstar is making it easier to align your investments with your values.
got it. So they're looking at the whole picture, not just profits. But what about the cost of all this? I mean, running a company like this has got to be expensive.
You're picturing analysts everywhere, I bet.
Stacks of paper, the work.
Well, they do have a huge team, over 12,000 employees as of 2022. But their biggest expense, it's not what you might think.
Oh, let me guess. Software, data analysis tools.
Nope. It's actually employee compensation. That's a huge chunk of their cost of revenue.
Wow, so they're really investing in their people.
Big time. It shows they value expertise, research, analysis, all that human element. These aren't just robots crunching numbers.
Interesting. It makes you wonder about the long-term viability, though, right? I mean, AI is everywhere these days. Is Morningstar at risk of falling behind if they don't adapt?
That's a really good question, and it's something we should keep an eye on. Speaking of keeping an eye on things, did you catch that little detail in the reports about their credit facility?
Refresh my memory. Was it the part about...
They switched from LIBOR to LSOR.
Right. Okay, honestly, that sounds like alphabet soup to me. Explain it like I'm 5. What's the big deal with this LIBOR-SOFR swap?
Think of it like this, LIBOR. It was how interest rates were set for a long time, but it got a bit messy.
Messy how?
There was a scandal, manipulation, all that. So now they're moving to SOR, which is considered much more stable, more transparent.
Okay, less chance of shenanigans.
Exactly. It shows Morningstar is all about managing risk, making smart financial moves. And for an investor, that's a good sign.
Stability is sexy. So we've talked about big picture stuff, but what about the people at the top? Joe Mansueto stepped down.
Right.
Kunal Kapoor is the new CEO. What's the word on the street? Any big changes afoot?
Well, those are some big shoes to fill, right? But from what I gathered, Kapoor is all about innovation.
So not just maintaining, but pushing forward.
Right. He wants to use what Morningstar is already good at, the data, the research, but find new and exciting ways to apply it. There was this quote from him. Let me see if I can find it. Here it is. We're excited by the opportunity to leverage those strengths in new and exciting ways.
I like it. Forward thinking. But how does that translate into action? Let's talk about their acquisition strategy. Acquisitions, they can be a real game changer, right?
Make or break you.
So how's Morningstar playing it? Going for big swings or staying conservative?
They're not afraid to make moves, that's for sure.
Like what? Give me some examples.
Well, they picked up PitchBook a while back. They're all about private capital markets, data, research, the good stuff.
Okay, so dipping their toes into the private equity pool. What else?
Oh, and Sustainalytics. They're a big name in ESG research and ratings.
So they're putting their money where their mouth is on that whole ESG thing.
Exactly. It's like they're building this, I don't know, this one-stop shop for investors.
No matter what you're interested in.
Right. Public companies, private equity, ESG factors, you name it. They've got data on it. They're adapting.
Makes sense. The world's changing. Investors are changing. Speaking of which, what about their own people? Attracting and keeping talent? That's going to be tough these days.
It's a dog-eat-dog world out there.
So what's the secret sauce? What's Morningstar's employee love potion?
Well, they talk a lot about their culture in these reports, creating a good environment, diversity, inclusion, all that jazz.
The good stuff.
Right. And they invest heavily in their employees, training programs, development opportunities.
Try to keep them happy.
Exactly. And engaged. It's not enough to just attract talent these days. You got to make them want to stay.
Loyalty's a two-way street, right?
100%. Especially now with remote work and everything, people want purpose. They want to feel valued.
It's about more than just a paycheck. Okay, back to ESG for a sec. It's clearly a big deal for them. But it hasn't been all sunshine and roses, right? Wasn't there some regulatory stuff?
Ah, you're talking about the SEC investigation.
Yeah, that's the one. What was that all about again?
So the SEC was looking into Morningstar credit ratings, specifically their methods for evaluating ESG risks.
Like in those commercial mortgage things, right?
Exactly. Commercial mortgage-backed securities. They had concerns about the process, the transparency, all that.
So, bit of a black eye for them.
It definitely raised some eyebrows. But ESG, it's still a newish area. There's going to be bumps in the road.
Growing pains.
Yeah, that's a good way to put it. I think the important thing is how they respond, right? Do they use it as an opportunity to improve?
Or do they just sweep it under the rug?
Exactly. Transparency is key, especially in ESG. Investors want to know they can trust you. Speaking of trust, let's get down to brass tacks. Financials. Are they making money?
That's the bottom line, right?
Well, the reports show they're profitable consistently. Revenue's been growing steadily, even with everything going on in the market.
So, good signs.
It's promising. They seem to be managing costs well, investing strategically.
But what does that mean for me as an investor? Should I buy their stock?
That's a question only you can answer, right? These reports are a piece of the puzzle. You got to do your own research, compare them to competitors, all that due diligence stuff.
Don't put all your eggs in one basket, right?
Exactly. Now, before we wrap up, I want to circle back to this idea of Morningstar becoming more than just a data provider. This whole wealth management push, it's fascinating.
Yeah, it's like they're not content with just giving you the map anymore.
They want to be your GPS. They're building platforms, software, all these tools to help investors actually manage their money.
From information to action.
Nailed it. And it's democratizing access. These were tools that used to be available only to the big players, the institutions.
Now it's open to everyone. That's pretty cool.
Yeah.
But it does make you wonder, what does it mean for Morningstar's future?
Are they going to pull it off? Can they really compete in the wealth management world?
And how does this affect us, the investors?
So many questions.
Okay, so we've dug deep into Morningstar's annual reports, their strengths, their weaknesses, what they're aiming for. But what's the takeaway for the average Joe like me?
That's the million-dollar question, right? What does it all mean for you as an investor, as someone who maybe uses Morningstar's ratings to make decisions?
Right, because we've covered a lot. Their thing about independence, their push into ESG, their financials, all that.
And let's not forget their whole move into providing wealth management tools. That's a big one.
So how does this deep dive help me be a smarter investor?
Well, think of it this way. You're not just looking at their ratings blindly anymore. You understand what might be influencing them.
The market, regulations, even their internal culture, like we talked about.
Exactly. You're an informed consumer now. And if you're thinking about investing in Morningstar itself,
Put my money where my mouth is.
well, you've got a better picture now of their financial health, their strategy.
Their risk appetite, their leadership, all that.
Exactly. And even if you're thinking about working there,
Switching gears a bit, but yeah, good point.
you've gotten a feel for Their values, their culture, do they align with yours? It all factors in.
So many things to consider. It's like knowledge is power, right? The more you know.
The better decisions you can make about your investments, your career, all of it.
Couldn't have said it better myself. But before we wrap up, any final thoughts? Anything that really stood out to you?
I think this whole wealth management thing, it's really interesting. It could be huge.
Yeah, that was a big theme, wasn't it? Moving from just providing information to...
To actually helping you manage your investments. It's a bold move. Will it pay off? Who knows?
Lots of questions still, right?
Tons. But that's the fun part. Keep digging, keep asking questions. Look at their competitors, see what they're doing.
And that's what this is all about, right? This deep dive, it's just the beginning.
Exactly. There's a whole world of information out there. Go explore it.
Love it. Well, on that note, we'll wrap things up. This has been enlightening, to say the least.
My pleasure. Always happy to dive into the nitty-gritty.
Until next time, folks, keep learning, keep questioning, and keep investing wisely.